Well, joining me now is David Cohen, head of Asian forecasting at Action Economics. David, welcome. Thank you for joining us on the Pulse. If we could just look at China's decision over the weekend, there was almost an assumption they were going to raise rates, and then they didn't. Did that come as a surprise?
Certainly, many people expected they would be hiking interest rates after the spike reported in inflation for November. But I think people are still looking for the central bank to proceed with rate hikes, perhaps even before the end of the year.
Now, this new loans target for next year, is that another way to try to kind of control the fast growing of the economy?
Yes. Traditionally, the Chinese central bank uses what they call administrative guidance, giving targets for the banks on their annual loan growth, and they did restrain it somewhat this year after encouraging bank lending last year as a way to counter the global slowdown. And as you just noted, that they're apparently going to lower the target again for 2011 as another way to try to restrain overheating.
Now, is there a concern that the fact that they haven't raised rates now might mean that they're rushing to do it later on, that there's a kind of a quick tightening at some point? Because we are seeing some of the inflation numbers are actually coming in quite high, perhaps higher than was anticipated by analysts.
Yes, that was the November inflation at 5.1% year on year. What was the highest in over 2 years, a little higher than most people had forecast. I think the central bank is proceeding along several fronts in an effort to restrain possible overheating. As you noted, that they've increased reserve requirements. On Friday, they announced a reserve requirement increasing by a 0.5 percentage point. That was the 6th increase this year. They did raise interest rates in October for the first time since 2007, and expectations are that they will continue gradually raising the lending rate, perhaps by a full percentage point over the next 12 months. They also have been tolerating some gradual appreciation in the currency as a way to contain inflation pressure. And although they've resisted pressure from their trading partners to perhaps allow it to the yuan to appreciate a little bit faster, it does seem like they're going to tolerate maybe appreciation at a 5 to 8% annual rate over the next year, which would help in containing inflation pressures. And finally, as you noted, they give targets for loan growth to the banks, and apparently they are trimming it a little bit further for next year as another way to help prevent overheating.
So overall, how in control do you think they are? How able are they to prevent these asset bubbles that people are concerned about?
So far, it should be noted that the inflation has been centered in food prices, which were up over 11% year on year in November. Excluding food, it was still a relatively moderate 1.9% year on year in the November CPI. But I think they are concerned that they don't get behind the inflation curve, and especially in the face of evidence that the economy has regained some momentum. It hit a soft patch in the middle of the year, but the data for November showed strength across the board in retail sales, exports, industrial production, and investment spending. So against that backdrop, I think they won't be that averse to continue gradually tightening monetary policy.